Hey, once again, welcome back to NightAccountant.com's course on Realtors and Reducing Taxes, expenses on Schedule C. The good news for you and for me, because I'm spending a lot of time recording this course, is that this is our last section of the core part of the course for Realtors and Reducing Taxes. Now, we may have a couple other little mini classes set up on items, like at some point we're going to have a course on retirement for individuals like yourself on how to maximize your retirement from your real estate income. However, for all practical purposes right now, we are near the end, or we are ending up our course on Realtors and Reducing Taxes. So thank you so much for watching our course. I hope you've learned a lot. I hope you go back time and time again to different sections when you have a tax question, when you have an argument with somebody about a tax issue, and also when you want to save a lot of money on your taxes. So let's move forward here, part 3 of other expenses. Number line 48, page number 2, your Schedule C carries forward to 27A. Okay, gifts. Now this is actually a big part of the course, big part of this section of the course, because gifts can be pretty involved for a deduction, and often they are overlooked, and then also they are often not taken advantage of to the extent that they need to be. And this would include housewarming gifts to clients. This would be gifts to gatekeepers, individuals who you have access to, you form a relationship with, who could be a referral base from other people in our 5 pillars of business success. We call these individuals gatekeepers. Also, they could also be gifts to prospective clients. So you don't have to be a client to give a deductible gift to somebody. However, as you're going to find out in a few moments, that gift, they can be limited financially. And a record keeping, got to get a bit of record keeping going on there. Okay, gifts can be an effective way. That's what I meant. It's often overlooked. It can be a very good strategy to help you form these relationships. Can be a way to generate referrals. Also, even to like others, like a current client. Let's say, for example, it could be a discussion piece. Let's say for example, you buy a door knocker for a new client, or some type of really fancy doorbell that gets the people that visit the house. Once they purchase it, ask them, "That's really nice. Where did you get it? Where did you get this door knocker?" Or whatever you give to them as the gift, and they'll say, "Oh, my wonderful real estate agent gave to me." And of course, that leads into you getting more business. So very strategic way to get business is the type of gifts you give to both prospective clients, past clients, current clients. However, there is a gift limit. And this is where a lot of folks overlook, a lot of misinformation, a lot of misunderstanding. That limit is $25 per person per year. Now, what makes that seem kind of crazy? You say, well, $25 isn't very much. And you're right, $25 isn't very much. That is because that the limit was set in 1954. And that $25 limit was not adjusted for inflation. However, if they had adjusted it for inflation, it would be worth $225 per day, would be the equivalent gift of a $25 gift back in 1954. However, each year we have to give more crappy gifts, for lack of a better word, because we can't deduct anything more than $25. But if the IRS let us do it, and it was fair, and it kept up with inflation, you would have a $225 gift you give to each person per year as a business deduction, and that'd be pretty sweet, really. Now, deduction limit. This deduction limit is not a limit on the gift, so it's really a limit on the deduction. So you can give more than a $25 gift per person per year. However, you only get to deduct $25 per person for a year for a gift. So you can still give that $225 gift to somebody if you really like them and it's really worth it. It's really worth getting the referrals. However, you only get to deduct $25 of it. So you need to weigh that out for yourself. Now, let's say if there's an example here, you buy and install a new mailbox for a client, cost you $200. Now, let's say the deduction is limited to $50. Now it's $25, but if it's a husband and wife, it's limited to $50. So it's $25 per business individual. Not necessarily each family member, but each person with which you have a business relationship. So if that husband and wife, for example, who purchased the house, or you sold a house to and you purchased you bought them a gift, if they had 3 kids, that wouldn't make it another $25 for three children, because they're really not your clients. The husband and wife are the individuals with a business purpose. So the $25 limit, as I said, applies to individuals, not groups. So let's say, for example, you give a thank you meal to an attorney and his family or her family, say it's a closing attorney, your limit is still $25. Now, I'm saying that because maybe their spouse and their family members, you really don't have a business relationship with them. So it's $25 per person per year with whom you have a business purpose. On the other hand, let's say you cater a $100 meal for an attorney's and there's 5 members of their staff. So you give it to the attorney plus 5 members. Your deduction limit is going to be $125 for those 5 members. If you also bought it for the attorney, the limit that would be 6, so the limit would go up to $150. So it depends on the number of individuals in the group that you're giving the gift to limit the deduction as a gift. Now, if you cater that meal to the individuals also, you may want to look potentially, is that really a promotional gift? Could that be advertising? Probably not under this circumstance because it's not open to the general public. But that's something you need to think about. Okay, gift cards. If you give individuals gift cards at the end of the year, say as a Christmas gift or whatever you're doing, remember that $25 limit applies per individual per year. So only per individual per year. If you give $25 to somebody a gift card in February, you can't give them one, around December as another gift. That's $50, only $25 deduction per person per year. Commission and referral fees, remember, these are really not gifts, so there's no $25 limit. These individuals are actually providing a service to you. So they are deductible. We discussed those are deductible in different places on your tax returning, depending on your tax return, Schedule C, depending on the nature of the services they provide. It's either going to be commissions or advertising. Now, also remember, or you may be aware of this, you may not, a deduction in commission. You see this a lot of times on closing statements where you may give up part of your commission and give it back to the buyer or the seller on the closing statement. That is really not, that's not considered a gift. And generally speaking, it's really not going to be considered a deduction on your return because hopefully it's not going to be included in your income by your broker whenever they do that 1099 miscellaneous. It shouldn't be included in your income. If per chance they do it, then you may need a deductor to have them correct the 1099, depending on how they record these and how they manage their office themselves. Also, I want to make a distinction here, make sure you understand there's a difference between a gift and a promotional giveaway, which we discussed promotional giveaways in a much earlier section under advertising. Promotional gifts include your name and logo, and they're distributed to the general public or distributed to a group of people. Let's say you have pins, you have something made, coffee mugs, whatever. They're widely distributed to individuals to promote your business organization. Remember, those items are limited to $4 each when you do that. So when you're looking through the catalog, seeing what you can give that has your name or your logo on it, remember it's $4 each per item that you're giving away. And if it's over $4 for each item that you're giving away, that could be considered a gift and have to follow these gifting rules. So it's very important that you remember that, and it's also limited per individual per year for the gift. So what do you need to prove your gift deduction? Well, you're going to be able to prove, and this is probably one of the most important parts because everything else falls away if you can't prove this, the business purpose of giving the gift. Why did you give the gift? How will that help your business by giving the gift? What is your business purpose in giving that gift to that particular individual? The recipient's identity. So you need to show, if you deduct this on your tax return as far as gifts, who do you give it to? Why do you give it to them? What type of gift did you give? You should be able to show the type of gift that you gave to those individuals. You need to keep records for each one of these items here. The date given, how much the gift costs, of course, and that would be subject to that $25 limit. So if it's more than that, you can give a larger value gift. However, remember you're limited at $25 per person per year. Now, in order to be able to prove these gifts, in order to track them effectively, enter the details of the gifts, the items we just discussed here, enter them somewhere into your bookkeeping system. Also, a good idea to do is when you purchase the item, on the receipt, if there's room on the receipt, you could write it on the receipt. However, if it's more of a smaller receipt, staple that receipt to a larger piece of paper and write down all of those details on that receipt so you have it if and when you need it. Oftentimes you'll get that, you'll put it in the envelope through the record keeping system we have. You're gonna track it, you know it's a gift, but if you don't have those details 3 to 4 years later, upon audit, you may lose the deduction. We don't want you to do that. Also, make sure you keep thank you notes. Either thank you notes from you to the individual you gave the gift to, or thank you notes that they may send in return that mention your gift. So the more evidence you have, the more likely your deduction is going to stand. Remember, non-business gifts are not deductible. So if you have no business purpose, if you cannot show a business reason, somehow you anticipate some benefit to your business from giving that gift, no deduction for the gift on your Schedule C. We're not going to discuss gifting rules or the gift tax rules. Are probably not going to apply to any of this if you're not getting to that level. However, remember, no business purpose, no deduction. Be careful also of gifts to relatives. Even if you, everything we're talking about is really amplified as far as need to be able to prove your gift. If you have some form of relationship other than business outside of it. Doesn't mean you can't give a gift to your in-laws or somebody whom you either sell a house for or find a house for and they move into it after the closing. You provide them with whatever gift, just like you do everybody else. And that's kind of a good rule of thumb. Is a lot of times realtors would give the same type of gift to each individual. Just to, it's kind of the way they do things. It kind of builds a brand for you. So if you're giving the same thing to a relative that you give to everybody else, you're probably safe with that. But just be careful of gifts you give to relatives. So that's it for that section there. Let's talk about moving down the alphabetical order here. Now we're going to go to listing fees. So these are items that you can deduct as ordinary necessary business expense of your organization. Usually shows up under other expenses. And these are really fees that you pay to list the property in databases like the multi-listing services or whatever you use. You have to pay a listing fee to have it put in there. That is going to be deductible. They're searched by realtors and other individuals. For example, as I said, your multi-listing service. Membership fees and any fees that you need to add those properties to the multi-listing service would be deductible. Do not confuse this with advertising, as I was going to say, and I'm glad it popped up on the screen, because if you're like Zillow or other places, if you're advertising in different places, advertising a particular home that you're selling, that is really more of an advertising expense. That is not really a listing fee. This is main thing we're going to have here is fees that you pay to get them into multi-listing services, primarily your expense for that. So lock boxes and entry systems, don't forget these. Oftentimes folks will buy these during the year, or they'll have membership dues that are associated with these, or they're coming out with new ones all the time. So just remember, they are deductible in your tax returns. This could be boxes that hold the keys for the entry. Sometimes they used to have, a key, you'll put the code in, as you know, you roll the little things, get the key out, and you can use that. So that's one way that you could do it. Those are deductible. Remember, those are deductible. Now there's a lot of times that you have memberships or fees that you have to pay on a regular basis, either per year, per month. There's systems designed to allow realtors access multiple platforms. I say that oftentimes there's a wand now, there's a card you use, there's different ways to do it. There's probably at some point, you guys may know I'm really not selling real estate anymore, and it was 20, 30 years ago when I even did that. But you may even have something on your phone now that allows you to access these entry systems. Any fees, expenses related to that are deductible. Annual fee for service, as I said a moment ago, deductible. Now remember, if you're purchasing a lot of these locker entry systems for your own use in your business, if you purchase them all and they're over $500, if you purchase them in bulk, or if one costs over that, I hope they don't, but if they do, remember, those could be required to be depreciated if they last longer than a year, useful life is longer than a year, and it's over $500, which is kind of safe harbor that we use in this course, see if you can expense something or not. All right, a couple final notes on expenses. Getting ready to wrap this up. As you can see, final notes on other expenses. Okay, what we've given you is not an exclusive list. I want to make sure you understand there's going to be many items that you can potentially deduct that we did not, you can't mention anything in any course, no matter how long that course is. We're not going to hit everything. We may have some resources. Remember to check our website out, check the resource section of this course. We're always adding new things that we think will be beneficial to realtors. So even if you took the course or you're taking the course now, come back in 6 months or so if you have a question about something. Go in and ask, is this a deduction or not? There's also a section, I'm getting ahead of myself, but there's a section on there in the course where you can ask questions, and hopefully we'll be able to get back to you in a timely manner with an answer to your question. But also there's probably a lot of lists and checklists on there, which we're going to be adding all the time to help you be more effective at maximizing your deductions on your tax return. And remember, just for your personal use, a deductible expense is what? It's ordinary for your industry, and it's necessary for your business. So if you can ask about any money you spend, is your business purpose? Is there a business purpose in purchasing this? And is it really ordinary for the real estate industry to have this type of expense? If it is, and it's necessary, ordinary necessary, guess what? You can deduct it. The key to prove the purchase, you need to prove your purchase cost and your business purpose in that cost. So you need some type of receipt and a business purpose to get your deduction. So hey, that's it. It's party time. Thank you so much. Thank you for choosing Overnight Accountant for your education needs with regard to minimizing your taxes. Also, remember to go through our catalog. As you'll see, we're adding more courses every single month to help you not just be a better real estate agent or to minimize your taxes, but to help you be a more effective business owner. So thank you so much. Thanks again. And we hope you see you in future courses.